Hey everyone, welcome back to Chart Smart Bharat. So let's start today's video with a question: why 95% of retailers lose money? And in today's video, I'm going to explain you exactly why and how you can avoid it. And I think it will change your perspective about the stock market completely. And it has the potential to change your stock market journey altogether. So when I started with the stock market, most of the times I was also losing money, and here and there I was making profit. And I believe that was purely luck. Then someone told me that I have to learn about stock market first before investing. Otherwise I'll just go broke or I'll lose all my money. So I went to the obvious places like Google and YouTube, and I found everyone was telling their strategy works. And if you follow their strategy, you will make a huge amount of money. So I started with the very basic ones like candlestick chart patterns. I started with that. Then I moved to indicators. Finally, I moved to option chain based trading. And I tried all of them. I watched thousands of videos on YouTube. I read a lot on Google. I tried all of them, and I wasn't making consistent money. I was making profit here and there, but most of the times I was losing money. So I thought to myself, okay, who moves the market? And the obvious answer to that was, it's definitely not the retailers, because the retailers are the guys like you and me who lose money almost all the time, 90 to 95% of the times. Then who's the other guys who move the market? So in a market, there are only two kind of people. One are retailers, as I said, you and me, who lose money, and other ones are operators. So 90 to 95% of operators make money. And how do they make money? By trapping the retailers. So now try to understand one thing. For every buyer, you need a seller. What do I mean by that? So let's say if you want to buy a stock of 100 rupees, there must be someone who is selling the same stock at 100 rupees. If that is happening, then only that transaction will go. Otherwise, that transaction cannot happen. So now let me show you and explain something from operator's perspective. For example, an operator has 10,000 crore rupees. They have huge money and they have huge knowledge. Okay, they want to buy stocks of 10,000 crores. How do they buy? When someone is selling the stock for 10,000 crore. And how do they do that? Let me show you on the chart. So for example, if I show you in here, you see, you will see something in here. I'll explain. Here you see. So here, this was a resistance and this was support. So price came from resistance, came to support, then from support to resistance again. As all we know, then from resistance price is expected to go down. It went down. Now you see the trap from the operators now here, you see. So now again we are at the resistance. So for retailers, they expect the price to go down from here. But what is happening? The operators took the price bit above that, which means it gave an indication to the retailers that the price is breaking out. So they bought a lot of it, and as they bought, the operator sold it and price came down. So they all came into panic. They sell it and operator buy it. So that's how he trapped them first in here. Now take another example. Now it is again coming to the support here. Now what retailer is thinking that the price will go up from here like this. But again, you see how the operator trapped the retailers, because they need liquidity. They want to buy 10,000 crore rupees of stocks. And how do they do that? By trapping the retailers. And how do they trap? Because don't you think they also know all the candlestick patterns, all the indicators and everything? They already know. They know where a retailer wants to buy, where a retailer wants to sell. They already know that. And that's why, and that's how they put the trap, and they make money, and their purchase goes in their direction as they have planned it. So this is how they make money. Now who these operators are? So basically they are FIIs and DIIs. You must have heard of them. DIIs, they are like big institutions who buy and sell of a lot of stock, and they move the market. It's not the retailers. Retailers never move the market. We are like a drop in the ocean, not even a drop in the ocean. These are the big fishes. So just imagine if there is a way with which you know where they want to buy or sell, what will happen, or where they want to put traps. If you know that information, then you can avoid the traps, you can buy at the right levels, and you can sell at the right levels. Or in other words, I'll say, if you can just follow the footsteps, because we do not want to follow the retailers, because retailers are the ones who are losing money, and it's the operator who is making money, and we want to follow the footstep of the operators. One more small example I'll give you. If the market is in uptrend, never sell. And if the market is in downtrend, never buy. Because if you do that, you are directly falling into the trap of operator. And that's how operator trap you. So I gave you two examples how operator trap the retailers, and retailers end up losing money, and all that money goes to the operators. I hope you understand why most of the retailers lose money and where that money goes. So if you like this video, please give it a thumbs up, share and subscribe, and do let me know in comment section if you have any question or if you want me to explain any topic in detail. Until the next one, take care and bye bye.